Hey guys, we are back with Breakthrough 2020. Just a reminder for those that are in my network that are watching this episode today in the show. First of all, this is a no frills, no fancy type environment. It's solely a way for those that are going through obstacles or adversity in a time when we've all been disrupted to potentially find resources and access to what I believe has been a very big gift and blessing for me over the last 20 years, and that's the phenomenal people that I know. And in doing that, I've invited a good friend of mine, Barry Blanton, from Blanton Advisors in the Woodlands, to come on and discuss about some cash management and value adds that you could bring potentially right now that maybe you've overlooked that could help you impact your bottom line. And potentially, well, a lot of us are in survival or get our bearings back underneath us. I believe a lot of these fundamental things that Barry teaches on a regular basis could be instrumental in helping drive profits into the future for you. I've seen it firsthand what it looks like when you button up a few things and you start to really impact profit. So it might not be about profit. It might be about saving your business. Who knows who's watching this, but he's going to give us some great tips today, a little bit on cash management, some cost cutting tips. So with that being said, Barry, why don't you tell everybody a little bit about your experience so they know who you are, they know why it is that you've been gifted with this stuff, and then we'll dive into a few of the questions.
Thanks, Jason, and thanks for having me. My name is Barry Blanton. I've got a CFO and business consulting practice in the Woodlands, Texas called Blanton Advisors, and we help small businesses, small and medium-sized businesses, handle financial and accounting needs, strategic thinking, financial issues. We serve as an outsourced CFO for small and medium-sized businesses who can't afford and don't frankly need their own CFO. And I've got an extensive background that began in banking many, many years ago and have been the CFO of a subsidiary of a publicly held company and CFO of another small business. And I've had this consulting practice for over about 10 years, helping small business owners with the financial side of their business.
Fantastic. So when I reached out to you, the idea was maybe putting together a couple of, things people might want to consider. So let's start with that. Let's dive into some of the, you said you put together a couple ideas. I'm just going to throw the ball over your court and let you fire away, and I'll ask questions as we go along.
So I think one of the first things that, if we didn't already know it, and some people may already live like this, but if you didn't know it before COVID-19, your business now knows the importance of cash, the old terminology that cash is king. So one thing that is a lesson, if we haven't learned, that we need to keep in mind is we really need, this has been a perfect example of the reason to keep some operating reserve cash on hand at all times. And is that 2 months worth of operating expenses? Is it 6 weeks worth of payroll? Is it 3 months worth of operating expenses? That depends upon your own circumstances and your own potentially other resources of cash. But going into this, if you had 2 to 3 months worth of cash reserves on hand, then you're way better off than the businesses that didn't have that. So that's one basic tip, and a lot of people can't do that. And right. But we should all strive towards having some cash on reserve like that.
Okay. Fantastic. Now, for a lot of times, and I've witnessed this firsthand, part of the reason why cash might be not on hand or not on reserve is sometimes there's cash falling out that in places we don't see it because we're not, maybe a lot of people who started business because they have a craft or a specific skill. I know personally, speaking firsthand, I'm part of a firm that works with, I have a lot of administrative support to make sure all the little things that I would probably miss are getting done. And that's by design, right? But I've done it also on my own in a couple of ventures, and I had to learn a lot of things the hard way, and so when it comes to other things, where do you oftentimes see opportunity that lies in cash management?
Well, and these are a lot of different bullet points, and we'll just kind of run through them and stop me if you have questions. Hang on 1 second. Sorry about that.
No worries.
That phone hardly ever rings. So the one first thing is either tightly controlling or eliminating overtime. in a time like that is one thing to look at. A second thing that really people, you might be surprised at how many recurring charges hit your credit card. And they could be memberships, they could be subscriptions, they could be any number of things. But in our electronic transaction world, we sign up for stuff all the time that automatically hits our credit card. So one of the hidden places to look is at all of those different monthly recurring charges, and not just monthly. Some of them are quarterly or annually charges. So it may not be something that hits your card right now, but it hits your card every September. But monthly or annual recurring charges on credit cards is another place to look to see if those are all necessary, actually. There's something that we call related party transactions. If you're paying family rent, or if you have family on payroll, or if you have another company that you're a part owner of that you have a financial relationship with, then those are things that might have some room to be flexible in these times. Something else you could look at. If your business has inventory, then this is a perfect time to look at the problem of stale and obsolete inventory that's not turning. Anything that's sitting in your warehouse that's not making you money or not being turned or sold quickly, maybe you need to get rid of stale or obsolete inventory. Or for that matter, there may be assets or equipment that you no longer use.
Yeah, I think one thing, speaking firsthand for several companies and private owners that I work with, is they're on the lookout for assets, and so there's going to be a marketplace because people are willing to invest capital at a time if they've been successful, meaning not successful, but if they've weathered the storm, they understand that there might be things. And so there's a marketplace really for those assets. And I think a lot of times people forget that. They're just going by day to day thinking, what do I do? Well, as a matter of fact, I know a guy in the Woodlands right now that spends his time finding assets and then basically wholesaling them and distributing them to other people. And for just that reason. So I think that's a great call out.
The idea is, like we said, cash is king. You want to get it in as fast as you can. You want to keep it as long as you can.
Mm-hmm.
You want to convert assets to cash that aren't producing any cash for you. So it all centers around managing cash.
Mm-hmm.
Another common thing is internet contracts, cell phone contracts, IT and telecom contracts. Those almost always, after a year or two, you need to be renegotiating those. You know how your cable bill, your next door neighbor that just moved in always seems to get a cheaper deal on his cable than you did. Well, if you go back and ask every year or so, a lot of times there's a new program out, or there's a different kind of a discount. Or maybe you're paying for cell phone lines. If you've got company-owned cell phone lines, review all the lines that you're paying for. You may be paying for cell phone for employees that are long gone, or phones that are long been lost, or something like that. So reviewing IT and cell phone contracts and things like that is another place you might find a little bit of money.
Wow. Okay. Yeah. I had a guy talking about the other day, specifically about the contracts that you have with vendor relationships and with the ebb and the flow of your business. So in a lot of instances, I guess you get bulk discounts and things of that nature. But with the current climate and things having shifted, a lot of times those bulk discounts aren't captured. And so there's an opportunity to go back and review your contracts and see against your accounts, I think it's accounts payable, and say, what we agreed upon from a bulk perspective, is it being captured? Because sometimes and I don't think it's any part of the vendor, meaning the person who's charging you. I just think that they place an order, they assign that order, maybe they had assigned a cost to it, and then it's systematically, y'all ship stuff in and out all the time, but they never go back to review the original contract to see if you got discounts as it scaled up. And because of seasonality or COVID adjusting your business, perhaps there's opportunity as business ramps back up or things are shifting, that maybe you're making sure that you're getting your bulk discounts. That's another thing that you just made me think about.
So that's a really good point. And actually what you want to do in that case is you have a little bit of a decision to weigh between two things. And that is, you want to take bulk discounts if they are significant enough that they make sense. But if they aren't, or you cannot get bulk discounts, then don't buy in bulk in this current day and time, and try to get more to inventory on demand kind of purchasing, where you're actually buying when you need it as opposed to holding inventory. Inventory that sits in your warehouse, unless you got a bulk discount on it, is not doing you any good. If you can match up when your inventory comes in to when it's going out and minimize that amount of time, makes your inventory turn faster and it ties up less capital.
Yep, absolutely. So we talked a little bit about reviewing your contracts, reviewing your cell phones, recurring charges, diving into overtime, which is a huge one. And I would remind people too. I know a lot of times when it comes to overtime, because I led teams over a period of time in my career when they started to scale back overtime. A lot of times it was during challenging scenarios. And so as a leader or as an owner, you might default to they need the money. But at the same time, it's keep in mind, if positioned or communicated effectively based on the circumstances of the scenario, the ability to sustain that job and keep that job is really important. I think it's all in your messaging, because I know sometimes being a leader is going to be difficult faced with some of those decisions. But survival and getting your business to the other side of this deal and thriving when we pivot, I'm sure more people would appreciate that job being there in the next 6 months, because you had to fight the fight,
And I do not disagree with that. I believe that overtime needs to be managed. That doesn't mean that we need to make a blanket decision to cut overtime. We need to understand what it's costing us and see if it makes sense. There's a couple of other employee cost areas that you may want to look at too, and that is, for instance, bonus. We would all like to keep our employees paid 100% of what they've been used to, but that may not be realistic for your business depending upon the situation that you're in. So is your bonus plan still viable? Does it need to be in place? Does your bonus plan need to be paused for a while, or does it need to be restructured because of the current economic situation? Another thing to look at is 401k matches. We'd love to be able to do that, but that's also a place that I've had several clients decide that they can push the pause button for a while on the 401k match. Now that is subject to what your plan says, but a lot of plans give us the option to make a discretionary matching contribution, and the fact that it's discretionary gives us the opportunity that we can, for a time, some time period, we may not want to make a matching contribution to a 401k plan.
Okay. Great call outs around the employee side of the business. So those are all some good, cool call outs. We talked about building up and establishing cash. Is there anything that we potentially didn't capture or catch that business owners should start considering?
Well, there's a long list of other things. You can ask for deferrals on loan payments. You can see if your landlord will work with you. There's a number of, you could sublease excess space. You can be more tight with how you turn on and off lights and your use of utilities and HVAC and things like that. One of the other things that we work with a lot of clients on is, those are all a lot, most of it, everything that we have talked about are expenses that you find on the P&L. So one of the other questions is, do you even have solid accounting in place where you can get a monthly P&L and see what's going on a monthly basis? And because if you don't, you can't even measure what making these kinds of cuts is going to do for you. So do you have basic accounting and bookkeeping in place and financial reporting that allows you to make those kinds of decisions accurately?
So I always use the term start with the answer. So if you can't find the answer, meaning what's my answer going to be, because you don't have appropriate data, it's kind of hard to determine which direction you need to head. And that's a very valid point. A CPA peer of mine had mentioned that 70% of bankruptcies were typically profitable, meaning these companies that went out of business, they were profitable. It's that they didn't manage their finances. So more often than not, had they been looking at accounting, paying attention to their accounting, looking at the P's and Q's of the operations aspect of the business. But what typically happens is they've got money going in, money going out, and then one day they wake up and something like this happens, a major disruption happens, there's not enough cash, and it's too little too late, right? So, which leads me to the next point, right? We're exiting a time where, yes, we're disrupted, but there are some businesses that are hurting, some businesses that have managed to sustain. But usually I've found that anytime you have a major, wake-up call, there's usually an opportunity to just get better into the future. So as they exit this and start heading into the balance of 20 and 21, there's a lot of tools that you just described, I guess in that order, right? Is what does your accounting look like? What do your accounting principles look like? Do you even have these items on your P&L? And then now can you start to, do cash management? When does somebody know, maybe they don't have a P&L, but how does a business owner know that it's time to maybe raise their hand and potentially start shopping around and find a person similar to what you do to step in and do, like at what point in time have I outgrown my capacity to do these things, in your opinion? As I start to get out of this deal, I know a lot of business owners, they made a widget, they were great at making widgets, all of a sudden they made a career out of making widgets, and now they realize, oh crap, I'm really good at widgets. But so what do these guys need to be considering when it's time to start looking at maybe enhancing or upgrading or adding on a fractional service similar to what you do? What are some good red flags or things or opportunities?
Well, there's a number of different things, but I guess in one general way, if the financing and accounting side of their business is keeping them up at night, and not because of the current economic situation, but because they don't feel like they understand it or don't have their arms around it. That's one signal. Another thing is, if they have a banking relationship, if they have debt and they have a banking relationship, and the bank is asking them for financial reports that they either don't know how to produce, or the bank is asking them questions about their financial reports and they don't know how to answer the questions. Can be another red flag. The banks these days, the reporting requirements are very regulated, and if you can't answer the bank's questions, then that's going to be a red flag to the bank. So you need to make sure that you can provide the financial reports the bank is asking for, and provide them the answers. Another red flag, if you will, is a business owner who really doesn't understand whether his bookkeeper is competent or exactly what their bookkeeper does all day long. And that's just a disconnect between an entrepreneur and a bookkeeper. And there may be nothing wrong there, but if they don't understand what that person's doing or how they're doing it or how well they're doing it, they may want to have somebody look over their shoulder. And we always say a lot of what we do is, a third set of eyes on something, an objective third set of eyes. So those are some examples of the kinds of things, questions that might be facing somebody. Another thing is, one of the biggest things a lot of small business owners will tell you is, my P&L says I made money I was profitable last month, but I don't have any money in the bank. Well, there's a lot of different things that can impact that. Accounts receivable is at the top of the list. If you sold it on credit, you have to recognize the income, but you may not have the cash yet. It may be tied up in receivables. And on the other side of that is, what about the payables for whatever you are selling? And there could be debt payments. There could be a number of different things that impact that. So business owners that struggle with understanding where their cash is going and not understanding if their P&L shows they're profitable and why they don't have cash in their pocket, that's another example.
And the critical component that I think people have to understand about cash and good accounting principles is when it does come time to finance. I know right now I'm in the business of trying to find a couple of keyed up uh, proper opportunities for some of the institutional money that I work with to go to work, but they're not going to sign up to go to work with anybody with bad books. That's just that doesn't work that way. And it's for a reason, because they want to know what they're looking at. And so if you think about, and you just described it, one of the biggest mistakes I learned as a leader early in my career was I didn't want to know the jobs that weren't my specialty for a reason, because I figured it was a distraction. I needed to focus on what I was good at, until the day that that person was stealing from my health club, and I almost lost my job because of it, because it was under my watch. And when I got that, that final warning one time, I will never forget it. Right, I'm thinking I'm about to lose a six-figure plus career because somebody stole thousands upon thousands of dollars from this company, and I signed off on all their little things. Now that was in the corporate realm, but the reality is what you just described. Um, because you're good at widgets and you've got an accountant or something, and maybe they're not stealing, but maybe they're just making mistakes because they're doing the best of their ability, and no one's ever shown them that, or they're not specialized in that particular arena. Maybe they weren't ever brought in to look at it from an entrepreneurial cash flow perspective. They're just looking at it from a simple, cross the T's and dot the I's and make sure you don't go to jail perspective, or or lose money or steal perspective. So yeah, you just called it. I mean, it's leaving money on the table, and if you look at it from that perspective, perhaps it helps change your judgment. So I look at this opportunity as a reset button for people, for business owners, a chance to refine your business in a way that would allow you to get to that next level on coming out of this deal, and I've been telling a lot of my friends and stuff, hey, you take whatever money people will throw at you right now. Don't worry about that deal, because there's two options here. You're either going out of business if it works, or you're going to get better. There's no way you're either on the way down, or you're going to be coming out of this thing in a much better position, for one reason, because there's no way you can't go through this disruption without forcing yourself to get better, and so perhaps getting a professional that understands it will help them again. So I am actually shamelessly plugging you right now, but the intent really was to make people.
Well, thank you.
Yeah, Barry pays me in bottles of wine whenever I see him. I'm kidding. Now, even though we both like red wine, but no, I would say that my friend Barry's very good at that. But if it's not Barry, I'll leave him with some parting calls. But I would highly encourage using this opportunity to build and sustain your accounting and financial principles to build off of. It's not sexy, it's not fun, but it does make dollars, and making dollars makes sense. So Barry, any additional adds that you have?
Oh, I would just add one thing to that last comment that you said. Coming out of this, business owners have an opportunity to bring their business out of this and have it look a little bit different. Maybe they don't need as many as employees. Maybe they don't need as much space because employees can work from home now. Maybe employees one person can do, we figured out through this that they can do the job of two people. So they can be more efficient, and we can help people do financial models that show, well, if we want to get our revenue back to the same level, can we do it with fewer people, and it makes us more profitable? So you're right. Coming out of this is an opportunity to reset some things.
Amen. So Barry, I appreciate it, and really to those that are watching, it's Barry Blanton, Blanton Advisors in the Woodlands. As a reminder, all the businesses and referrals and friends that I'm bringing on here, we don't have any formal referral arrangements or anything like that, right? I'm not getting paid if Barry gets help from the business here. This is solely the fact that I love relationships. I've had countless lunches and dinners with my friend Barry when I go up to the north side, and I establish and understand him as a human being. And he's one of the best people I know. He does a lot of good work for cancer and the fight against cancer. The fight against cancer, nobody does good work for cancer. But the fight against cancer, and has established a strong foothold in raising money to support cancer, the fight against cancer there in the Woodlands. And again, he's a brand champion and an area champion, but he's not afraid to go all over the city. So he's helped a couple of my clients, and he's just a good all-around person. But if he's not your resource, the first place I would go is really go in and ask a lot of questions to your accounting department, right? So ask to see certain things, show them how they're showing you how they're cutting expenses, and then just start scratching your head going, okay, well, I'm curious, where are all these things? So we talked about a lot of those, but overtime, recurring charges, vendor relationships, that would be your accounts receivable, accounts payable, inventory that's stuck on hand. So negotiating different contracts with your vendors, or also with negotiation. And that can go all the way from your tenant, meaning your lease, all the way to everybody. Everybody's going to be looking for ways to sustain and not lose revenue. So now's a really good time to go to that person and say, hey, I kind of have to ask for some help. Are you willing to offer it, or do I need to look elsewhere? And trust me, more people are probably going to be willing to offer it right now, because they're looking for ways to keep that recurring revenue and keep you as a client. So, Barry, any additional ads or anything before we get out of here today?
No, we're good. I appreciate the opportunity. Thanks for having me on, Jason.
Awesome. Appreciate you. Thank you, guys. And just stay tuned. I'm going to continue to send out, and hopefully you guys can subscribe and stay tuned to the different people I meet with on a weekly basis. Have a great day.
Thank you.